Hi guys, welcome back. So today I'm not feeling very well, maybe because recently the weather in Canada is pretty cold. So I will just make a quick video today and before the market close. But it's not far away from closing anyway, so probably not much change from here. So the sell-off is a bit much since the morning, but I think still that this might be a pullback from the rebound rally. Just like what I posted on the Discord yesterday before the market opened. Normally, I would send a message on how I think about the week after I give some thought and planning during the weekend. So this week, I see a continuation of the rebound rally or a relief rally from the deep diving. But after the pullback, that might happen at the beginning of the week. So maybe this week we would start rough and slowly get better, hopefully. This is why I suggested mainly the long positions. And I said I would continue watching out like UVXY when there is signs, like for example when the market is overbought or when UVXY at important support. So for the long positions, like the CWeb, Airbnb and Palantir, funny thing is that even though the market had quite a deep pullback today, like S&P dropping at most near 2%, all these long positions were still green today. CWeb is still up slightly, even though it went down from being 6% up in the morning down to 1.7% up now, and Palantir was mostly in the green from negative in the morning and continue running up. So why did I suggest Palantir in the first place? If you remember last Thursday when it was the most fearful moment, I said I bought the dip of Palantir since market open. So two big reasons. The most important reason, first of all, is that I believe war is actually good for Palantir. If you still remember what it was famous for since the beginning and how it was able to capture or find the most important secretive information for the US government. So then actually geopolitics would help the business for Palantir in the first place. And second reason is that I think the big sell-off from the earning reports has lowered the risk with the massive sell-off already. So good for war and risk had been lower than before earning. So that's why you can see that while the market has been fearful and selling off for many other sectors, Palantir has actually been up for near 30% since the low of Thursday. And even with the recent pullback, it still continued to run up. Is this a good time to buy in though? I need to remind you that it had reached resistance already. Actually, the first target of 12.4 is met. If it's passed through next resistance, around 13 range, okay? And then why did I suggest the CWeb? Even though it has been running down quite a bit. For that, we have to take a look at the Seng index. Recently, the Seng index has been selling off so bad. Indeed, actually making a new low, breaking the support of December and January. I thought the HSI would have a final dip with the US stock correction, but not necessarily make a new low, but it did anyways. So right now, I'm hearing a lot of negative voices. All the analysts that were pro-Chinese stocks and encourage or push people to buy in heavily when it was between 240 to 250 in this range, they have gone to be on the bear side and suggest to sell. From the look of it, it's not looking good for sure, especially the short-term indicator, breaking all kinds of supports like 1, 2, 3, and right now at the last support looked like it was breaking it and climbed back up. So short term doesn't look good, but it is very oversold. So in the short term, I expect to have some kind of rebound at least. I mean, even if it wants to continue reaching lower, it still needs to take a break, right? Breathe a little. But if you look at the long term, it's actually not that bad. Because if we zoom out, if you still remember this really long-term yellow trend line that has been supporting HSI every time it dipped there, including the financial crisis, the COVID crash, the trade war, the 2015 crash, every time HSI finds support there. So is it gonna be another time? Is it gonna fail us this time? I'm gonna choose to have faith in it as long as it doesn't break this support. And yes, I would still consider this again a once in a 10-year opportunity for the Chinese stocks if you believe in the Chinese growth story, right? If we look at the monthly chart, you can see that over a few decades in the past, every time it only dipped to this trend line for support and then it would bounce back up almost right away. Except for here, it stayed a while and it dipped there again. That was the 2008 financial crisis. This time, it might happen again. So if it in fact dip more than this and stay there for a while, could be a bit deeper, could be a bit longer, then this is not just a once in a 10-year opportunities. It might be a once in a 30-year opportunity. But this would mean that the sell-off is looking quite scary. You're talking about somewhere between 18,000 to 20,000. If it dips that much, which I think might be unlikely though, but if it does, then maybe it's considered a once in a 30 years opportunity. Because before this dip at the beginning of the year, the HSI was already considered very reasonable value, more than fair. Actually, most of the companies on average has dipped below 1 or 1 point something PB ratio. So you would be buying into a lot of the companies around their book value actually. So if you want to buy in Chinese stocks right now, I still remain my opinion about that. I would take advantage of the opportunities, but don't go all in at once, but buy in slowly. And also prepare that it might go lower, especially in March or April. There might be more pain coming with the FOMC meeting, or maybe even more problems, more geopolitics issues, and so on, right? So if March or April it would have a worse sell-off coming, then maybe you will have more opportunity to buy it cheaper. So my view is that to take opportunity of the bad news and buy in slowly, bit by bit. Don't go all in at once. But in the long run, I still think it's opportunity more than the risk. Just gotta counter the fear and be more patient. In terms of what to buy, Tencent is a no-brainer, I think. And Alibaba, a lot of people are giving up on Alibaba, I think. For now, the short-term chart is not looking good. It looks like it's breaking the long-term platform. And in this case, it might reach lower if it cannot close back up 111 today or tomorrow. If it can, then this is a golden dip. If it doesn't, then it would reach to the next level, between 88 to 95. It's possible. Right now, I think Baba is heavily shorted. And the problem is that too many retail investors holding the bag, and it makes it much harder to pull up. And also the biggest shareholder, SoftBank, would keep selling. So it creates a lot of pressure for Baba to get up. But in the long term, I think the company still has good technology and has a good future. I don't think it would be like what most people anticipated, that the CCP would destroy the company. I don't think they would do that. So the short-term political risk is probably just some cloud for now. I think right now Tencent and Alibaba are the two heavy shorted companies. Somehow it feels like to me that someone is trying to short these two mega caps to press down the index. For what reason though? I don't know. Maybe to press down the index so people are more fearful and sell out the other positions. We'll see later, I guess. Many people ask me when to buy NIO. Recently, NIO has a great news to be getting the second listing in Hong Kong finally in March this month. March 10th, so pretty soon. And because recently Xiaopeng and Li Auto has been included in the Hang Seng Tech Index. So not only it's making them more legit as new companies, but it also makes a lot of fun to buy in their shares passively. So I think this would happen to NIO soon after it gets the second listing to begin with, of course. So that is great news, great catalyst for the short term. The price action-wise, NIO is still in this overall downtrend. Right now it is actually getting a bit near the resistance in the 23-24 range. Yesterday, the good news had pushed it up 10%. Today, we had some pullback. Last Thursday, it got to the lowest of 18. I thought that was a good time to start to average down. But again, don't go all in at once, because I think when the market might have more pain to come ahead of us, there might be more opportunity to grab NIO at cheap price. For me, if NIO can dip to what I hope to be around the 16 to 17 range, I would start to buy in heavily again. And I'm hoping that would be somewhere near the earning for NIO, because I expect the earning to be bad for this time. NIO has not had any new models for a long time. It's understandable to have a bad earning for the year of 2021 alongside with the supply chain issue. But I expect it to be much better in next year, 2023. So I'm hoping the bad earning can drive down the share price so I can grab it at a cheaper share price. Okay, so that's it for today. And if you have enjoyed this video, please give me a big like and write me a great comment. And I'll see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.